Hello? Okay. Hi, everyone. Good evening. So thank you very much for your attendance today. Perhaps before we start, I'd like to extend our thanks to Mr. Bay, our guest speaker. And then we also have Pak Triyono here, and Pak Ando, Pak Dana Pamili, and all the attendees that joined today in the venue on site, as well and in the Zoom space as well. So let me introduce myself. My name is Clarin. I'm a senior manager from PwC Indonesia, and I particularly dabble in governance, risk, and compliance. So I look a lot into of financial operational risks. I also help experience in some due diligence projects in bank mergers, perhaps some post-merger, pre-merger gaps, and key integration risks as well. So today I'd be acting as the moderator / MC for you guys. And I think so we are going to have Bapak Triyono here today as the opening speakers or speech. So Pak Triyono is a CFA charter holder and volunteers as a president of CFA Society Indonesia. He is a partner at PwC Deals Indonesia who holds chartered values and appraisers from IVAS, IVSC, and serves on the board of Indonesian Appraisers Society or MAPI. He holds a bachelor degree from University of Indonesia and master degree from Warwick University, UK. So without further ado, I'd like to invite Pak Triyono on the stage, please. Give a hand of applause.
Thank you, Clarin. This is not a connection. Yeah? It's just coincidence that Clarin is a senior manager at my firm. For those of you who have not known me, I'm the vice president of CFA Indonesian Society. Unfortunately, for tonight, Pak Pahala Mansuri cannot attend, but he is usually attending the previous one, and he's going to attend another event that we will have soon. Also, I'm very happy that we have this event today. I think gradually we start to have this offline and physical event. I feel a bit surreal, yeah, because just like a month or 2 months ago, we inaugurate our first charter holders after such a long pandemic time, and then also we will have activity. Recently, we have a seminar on strengthening the pension system, and also we will have an event on diversity and inclusion. We call it Women in Finance. So I'm so happy that things are starting to roll back in. And also the event today is also signify the importance of ESG in investing, and also CFA itself as a charter, highest recognition in the investment industry, also continue to reinvent itself to stay relevant. Recently, we have a certificate in ESG investing, and we will also have one of our charter holders presenting today. I think a lot of us here are coming from the kind of old economy, but I think the trend of ESG really make change to everybody. For example, in my firm, I have about 20 people alone focusing on ESG. It's right there. Morris, can you? Yeah, Morris and his team is from our PwC ESG team. He's here. The partner is Julian. Unfortunately, he cannot be with us today, but some of the team are actually attending online. So without further ado, I think we can continue with the event. Thank you very much for the participation, and let's start the event. Thank you.
Thank you very much, Pak Triyono. So I think Pak Triyono mentioned just now about the ESG investing certificate. So I'm gonna invite Ibu Christine now. So Christine graduated from Curtin University, majoring in accounting and finance in 2012. She has been awarded the Certified Financial Analyst and has joined CFA Society Indonesia since 2021. And she also passed the ESG investing from CFA Institute in August 2022. So Christine has been working as a corporate finance and commodities for more than 10 years, managing currency exposures using derivatives and currently focusing on FP&A in Louis Dreyfus company. So I'd like to invite Ibu Christine, please, on the stage.
Hello, good evening, everyone. I am Christine, like been introduced before. I've just completed CFA certification last year, and 2 months ago, I just passed the certificate in ESG from CFA Institute. Okay. Tonight, I will briefly introduce about the program, certificate in ESG. And at the end of my presentation, I will also open the floor for Q&A session. Yeah, this is representing the ESG asset under management globally. So the asset under management is expected to exceed $50 trillion by 2025. This is the more than 1/3 of total global AUM. So for Indonesia itself, it has reached 2.3 trillion rupiah in 2021. And I'm also currently working in palm oil industry and have seen growing interest from the local and international banks offering sustainable credit lines with lower cost of funds. So it's noticeable growth you can see here. Okay, so from Indonesia itself, Indonesia Stock Exchange has issued 4 ESG-based indices. You can see here, the first one is IDX ESGL. So it has 15 to 30 constituents. So the ratings for this index was provided by the Sustainalytics. 47% of the company in this index are dominated by the financial industry, followed by 23% from the infrastructure. This index was launched in 2020. Yeah, the second one is the Sri Kehati Index. This one follows the sustainable, responsible investment practice. And the third one is the ESG sector leaders. This index choose representative in each industry with above average ESG scores, and the number of constituents in this index vary. And the last one is the ESG Quality 45 IDX Kehati. So it has 45 constituents, and it considers the quality of financial and ESG aspect with relatively large market capitalization and high liquidity, using ROE, EPS, and leverage as financial indicators. Okay, this is the sustainable finance roadmap in Indonesia. We have policies, products, market infrastructure, coordination, support, and human resources. So in terms of policy, we have green taxonomy. This green taxonomy is issued by OJK, Otoritas Jasa Keuangan. So the OJK has formed 3 guidelines, classification of the companies, green, yellow, and red. So green companies, which companies that does not do significant harm, apply minimum safeguard, and provide positive impact to the environment. Also align with the environmental objectives of the taxonomy itself. And the yellow is just do not do significant harm, and the red companies which do harmful activities. Okay, in terms of the coordination, Indonesia has Indonesia National Task Force, which has 47 representatives from the financial and capital markets. including stock exchange, social security agencies, and pension fund. It comprises steering team and the implementation team. Okay, as the human resource, CFA Society Indonesia also support this sustainable finance roadmap through the ESG investing certification and several webinars and on-site events annually. Okay, so this is the ESG, environmental, social, and governance. Of course, the leading factor here is the governance, because we have the big four companies, public accounting firms, and also the authorities that really good in issuing the policy and monitoring the guidelines for the governance, especially for the listed firms. Okay, the CFA Institute certificate in ESG investing. Why we choose this ESG investing certificate? It's because it's acknowledged globally, and it's this one of the credentials that we can use moving forward, and it can also give us an update for the latest ESG policies. And it's also demanded by the top firms currently. Okay, this is what I've mentioned before. Okay, this is what you will learn under the syllabus of the ESG investing certificate. Of course, the syllabus will introduce us to the three factors: environmental, social, and governance. Under environmental, it will show us what is the mega trends and what is material impacts of the environmental issues on the potential investment opportunities. Also, the current issues such as the circular economy and what is the mitigating and what is the adapting initiatives that we can do. On the social factors, it will elaborate more on the stakeholders, various stakeholders that we can pay attention to. Also on the megatrends issues like digital disruptions and demographic changes. On the governance factors, it will discuss more on the board structures for the companies around the world, and also how the shareholder engagement is being approached. Also, of course, the role of auditors in these governance factors. And then lastly, we will apply these corporate governance factors to the financial modeling, risk assessment, and quality of management. After discussing of the three factors, then the focus is on the engagement and stewardship. The syllabus will elaborate more on the appropriate methods to establish an engagement approach and across the asset class. Okay, the last three is the analysis, valuation, and integration. It will tell us how we use the scorecard for this ESG approach. And also how ESG factor itself complement the traditional financial analysis. Lastly, and how credit rating agencies approach the ESG credit scoring. And the second last one, ESG portfolio construction and management. We all know how we do the strategic asset allocation, and this certification will teach us how we integrate the ESG factors for the strategic asset allocation. and how risk and return dynamics of the portfolio optimization is impacted by the ESG integrated investing. Also, there are various kinds of ESG and SRI investment, and the syllabus will discuss deeply all of the different types. And also we have active portfolios, and also we have the passive portfolios, ESG portfolios. Then it will elaborate more what is the passive ESG portfolios and how we manage it. And the last part of the syllabus is the mandate analytics and reporting. So we are linking the sustainable investing to the mandate. And also the syllabus will also teach us how to define the sustainable investment strategy, and also the key mechanism for the reporting and monitoring of the performance and mandate alignment with the client objectives. Also, the last point that I want to emphasize is the syllabus also tell us the key challenges in measuring and reporting the ESG related investment performance. Okay, this certification requires 130 hours of studies. So it's a computer-based exam. The result will be revealed right away after we complete the exam. We can do it at home under strict circumstances, of course, or we can choose to do it at the appointed test centers. If I can elaborate more, it's 100 questions, and it's 2 hours and 20 minutes exam. I think that's all for the CFA certificate in ESG investing. Now I open the floor for a Q&A session.
Yeah, so thank you, Bu Kristen, for the session. So ESG is definitely a growing topic, and CFA ESG investing certificate hopefully provides a very good baseline that is also now well demanded by leading firms as well. Yeah. So now I'm going to open a short Q&A session in case any of you here on the floor or in the Zoom space want to have any questions to Ibu Christine. Maybe I have a question for Ibu Christine then.
Sure.
Okay. So which area do you think would be the most challenging to learn and very different from your normal practice prior to you learning ESG investing?
Okay, I think the interesting one is the engagement and stewardship. So for we are the normal CFA, we just do analysis, but this ESG involve very deep research on the company itself and how active engagement from the asset manager itself to manage to grow the value, not only the financial value, but on the 3 factors itself. So requires broader knowledge of the investing, on the environmental aspect of the firm, social aspect, the stakeholders, and also the governance itself, like how is the structure of the board directors and how do we improve the reporting and the compliance.
Yeah, so I think that is a very interesting topic that, the governance, perhaps it wasn't there previously and now we do have to think about it, correct? Okay, so do we have any questions in the Zoom space, Ibu Dewi, or no? Okay, so I think if we don't have any other questions, I'm going to move forward to the next session. I'm going to invite Mr. Bay.
Thank you, everyone.
Yeah, so Mr. Bay used to work at CME Group as the Executive Director of Client Development and Sales Team, responsible for client development and sales to bank and intermediary clients. Prior to assuming this role, he was the head of interest rate products for CME Group in Asia. Mr. Way also holds senior management experience in organizations such as ISDA Asia Pacific, so Fitzo International, and Deloitte, and also worked in Deloitte Singapore previously. He also spent 10 years with United Overseas Banks as a senior derivative trader and later as the head of group market risk management. And during his 7-year stint as a senior derivative trader, he was responsible for running the Nikkei index option book and trading of the Nikkei index and JGB futures. So in group market risk management of UOB, he was responsible for managing all the trading and investment risk of the bank group. So I think I'm gonna just let Mr. Bay.
That was my previous life too long ago. If you didn't say that, I have almost forgotten about what I have done in the past, because it has been many years. So when Christine was talking about the ESG, I was like, I'm so embarrassed. After being a CFA charter holder for so many years, I didn't even bother about what CFA has been offering to the newcomers. I think I'm not going to pass the exam if I were asked to take the ESG test. Okay, when CFA Indonesia floated the idea to Harry, my colleague in CME, that they want a speaker to speak on ESG, I was taken aback. ESG is such a huge topic, yeah? Environment, governance, social, and I cannot speak on that. And CME is very much on offering some solutions for the ESG initiatives. So we end up narrowing down to just a very small part of environment, which is voluntary carbon market. This is what I'm going to share with you. Some development in the voluntary carbon market, how it works, and then what are the solutions available in CME. CME Group has actually done a lot of things over the years to offer products and services to that end. So we're going to have an overview of the development, what is carbon credit market, and the various components in this market, as well as the CME initiatives, and then our latest newly minted futures, the carbon credit futures. There are 3 of them, and I will share with you some information. So let's look at the history. When I go to search for history, then I realize that in fact, mankind knows about global warming 200 years ago, 1820s. Now we are 2020s. And the first one was some scientists that, if you are like me, that have done engineering or applied maths in our teen years, you will know Fourier, because we use Fourier series to analyze all the sinusoidal equations. And Fourier is the one who proposed that some energy are trapped on Earth that really warm up the Earth. Then all the other scientists start to think about what are the gases, how to do it. By reducing carbon dioxide, you can reduce the temperature. So only in 1930s, they start to pinpoint that the Northern Hemisphere, the Americans, the developed economies are actually the culprits that emit most of the carbon dioxide. But nothing has been done for the first century. Only in 89 that the UN started to form this panel. We call it IPCC, under the United Nations framework of a Convention of Climate Changes. They call it UNFCCC. Then they start to look into it. You see, after 200, almost 200 years, 150, more than that. Then they start to look into it, and they come up with this Kyoto Protocol that we always heard about it. Yeah, we don't bother. What is Kyoto Protocol all about? It says that we have to keep the emission at 1990 level, 5.2% below 1990 levels. Before I came on stage, I was talking with some participant on my table. Do you feel that this is a fair? Sorry, this is my personal view, does not represent CME. Is it fair? When all the developed world has been enjoying all the modern technology, using all the electricity, fuel, and everything, now they tell the whole world must keep at 1990 and below. So people in Indonesia are starting to enjoy the benefit of modern world. People in India, in China, they're starting to enjoy more. So you wanted to keep at 1990, whereby the developed world has already enjoyed most of it. So I don't know. Just this is personal opinion. And of course, we know that that was just the initial. The real one come only in 2015, the Paris Agreement, so that they want to reduce by 2 degrees C, and net zero by 2050. If you look at this chart, you know that when we say carbon dioxide emission, we actually have more than that. There are 6 gases, actually. We have CO2, methane, N2O, the sulfur dioxide, and then another 3 fluorinated gas. But of course, the main culprit is still carbon dioxide. This is US alone. This is not about the world. US alone is a good example. 70% comes from carbon dioxide. So we say reductions of emission, we are reducing not just carbon dioxide, we are reducing all 6 gases. So carbon dioxide comes from, we all know where, huh? When we burn things, when we generate electricity, we drive cars. Methane, it comes from organic stuff, from agriculture. And nitrous oxide and fluorinated gas are from appliances. So what is CO2 and what is CO2 equivalent? You see, we say that there are 6 gases, but we always mention CO2 because the standard is such that they convert everything to CO2 equivalent. 1 ton of this methane is equivalent to 28 tons of CO2. So when they express methane, they always use 28 times the CO2. So if you have 1 ton emission in this methane, you will put it as 28 tons of CO2 equivalent. That is why we always only mention CO2 emissions. In fact, we are referring to all 6. And they say that in 2020, the global emissions are about 50 billion tons. And from that year onwards, if you want to reach your 1.5 degree increase, you only have another 400 billion to go. So 8 more years, we would have bust our target. If you use 2 degrees as the target, because they said 2, but they preferably 1.5. If you use 2 as a target, you have another 1,100 to go. Not many years. In fact, we are going to exceed the target that we set for ourselves if we don't reduce from this 50 billion. I do not have the latest figures, but do you think, are we still within the 50 or more than 50? Probably the COVID has helped us a bit. We may be below the 50. But what if, when everything is back to normal, are we going to keep within the 50? Even 50 is not good. How many more years can you have? 20 years, right? 20, 22 years? You will be exceeding the target. And this is the emission from the different industry sectors. Obviously, energy sectors, the oil and gas, all the productions, all that you generate electricity, all these are contributing the most to the emissions. Of course, we also see that the agriculture and forestry land use, if you're still cutting down trees, definitely you are going to contribute to that. Waste and other industries. So these are the major contributors to the emissions. And what makes it so bad, I don't have to repeat this. Everyone knows more or less about that, right? Yeah, it increases your temperature, and especially you look at this, the 2 poles, north and south pole, the increase is very much more than the land mass in general. Yeah. And northern hemisphere is more than the south. Luckily, we are from the south. We are not the north. So comparatively, we emit less. Of course, they say that the seawater level rises, going to force changes in a lot of habitats. You have to move your house, you may have to change a lot of things. So what is net zero? Because the Paris Agreement also set a net zero in 2050. Other than the 2 degree make sure that the Earth temperature does not increase more than 2 degrees. That's one target. The second target is net zero in 2050. What does it mean? It doesn't mean no more emissions. It just means that when you emit so much, you have to have some other projects that reduce as much, so that the net emission by 2050 is zero. But I don't know how are we going to achieve that. They say that 44 countries implement policy to meet this target, but only 10 countries make it legally binding. And 70% of it covers only 70% of GDP emissions. So we have a lot more to do to achieve the net zero. And surprisingly, the aviation industry was not covered in the Paris Agreement. When they count all this emission, they didn't count the aviation industry. So the aviation industry, the Civil Aviation Organization voluntarily formed this standard to cut emissions. So it won't be mandatory. So it's not mandatory carbon reductions. It's a voluntary until 2027. And they say that, in fact, we'll mitigate 2.5 billion tons under this voluntary scheme. So this cost here is, later on you will see in the CME product. The first one, in fact, is catered towards the reduction of the aviation industry emission. Corporate net zero, many companies have pledged it, but of course there are also people who say that these companies are greenwashing, new term. In the past we whitewash, now we greenwash. We want to tell people that I'm ESG compliant. Of course there are skeptics, there are also people who support that. I think we should support it, and then we should conscientiously doing it towards this goal. So 20% on average, they think at most reduce 20% on average. This is what I have found out from one of the reports. Right? So the carbon emission market, there are two. One, which is mandatory, which is compliance. The government will set the cap for the industry. So for example, if the government say your industry can only have 1 million tons emission, so divided by the few big players in the industry. So if you emit less than that, 1 million ton, I did use it up. I use 800,000 ton. At least the 200,000 ton, I can sell it to those who cannot meet their cap set by the government. So we can trade that. This is most seen in the EU. They have a huge mandatory market. Cap and trade, this is one method, right? You cap them, if you don't use up, you can sell it. So there is incentive for you, right? If you give me 1 million ton, I use all my processes, my new invention or whatever to reduce the emissions, I can sell my credit to someone else. I will get money for that. I get paid for that. This is one. There's another one which is called the carbon offset market. This is what we call the voluntary market. Here, you need to have projects that can reduce emissions. So they will do this baseline calculation to say that, okay, before you've done anything, this is your emission. So if you do something to reduce it, this is a credit. You can sell them. So it's to encourage everyone to do something. Find your projects. It can be forestation, it can be technology-based and whatever. As long as you reduce emissions, you can sell the credit to someone else. So this is the second market. You're comparing the two, you see that the compliance or so-called mandatory markets are under this ETS system. They call it emission trading systems. EU, UK, German, all have that. New Zealand. The voluntary market is done through all this so-called registry. You have this UN registry called the Clean Development Mechanism, CDM, and the certificates is known as Certified Emission Reduction. And then the other, I will show you the four major registry in the later slides what they are doing. Right, so these are the registry that are in charge of approving, evaluating the projects, approving them, and issuing the certificates where you can sell them. So they are saying that the cap and trade, you can only reduce further if the government keep reducing the cap. Right, this year I give you 1 million, next year, sorry, it's 900,000. Only through that you can really reduce it. But the voluntary baseline and credit methods is your innovations. You can come up all new technologies to replace the current thing. So before that, this is your emission. Now I have new technology. I discard the whole old system, develop new system, which reduce it, and then I can sell that credit. If we keep doing that, everyone try to save on the emission, that will bring unlimited, technically it's unlimited. It depends on whether you keep doing it. So these are the two systems. This is what a brief diagram of the market. You need to have program managers. They come up with ideas. And they want to have carbon projects. The government must have the legislative support, must have some kind of support in the authority. And then you need the carbon standards, which are the registry, to register this project. And they are encouraging local communities and indigenous people, especially for those forestation projects, to participate, and they get some benefit from it. Because if this project is successful and certificates are issued to be sold to all these people who need the certificates, there'll be money and can be shared with the local community. Because you need the local community's help. Just like forestation projects. You say that I have 100 hectares of forest. What if the local community keep cutting the trees? You don't even know. You need these people to help you protect the environment. So they need to have some benefit. So this is what they think the flow of the carbon market. The registries, these are the fourth largest registry. In fact, most of the volume, or most of the certificates tendered come from these four. Verra is by far the biggest. Verra the full name is Verified Carbon Standard. You have this Climate Action Reserve, we have Gold Standard and American Carbon Registry. Yeah. Verra, okay, next slides, then we talk about what kind of projects they approve. What they do, they set the standards. If you go read their standard book, it's a huge standard to tell you what projects qualify. And they do independent assessments. They have to approve your project, or else you are not considered a project that is capable of producing the emission certificates, reduction certificates. And there is accounting methodologies to account for it. So in fact, all these are still in development. Of course, they have something now, but they are still improving the standards. And the registry will be ultimately issuing the certificates. It can be yearly, annually, they issue you the certificates, or issue it once every few years. You look at here, why Verra is the biggest? Because it covers all project classes. There are many different types of projects. Yeah? As I say, simply can be forestation or land use project. It can be technology-based. It can be like hydropower, solar, and all kinds of things. And for Gold Standard, they don't do anything that to do with forestations. They don't want to verify such project. They don't want to issue certificates. And this one covers everything, almost everything. The last one, it covers agriculture, forestry, energy, waste. So you can see that why Verra is the biggest, because it covers everything. And it has 1,792 projects registered in 82 countries. So a lot of countries use Verra as their registry. Yeah. And you can see that Verra this is the registry's volume issued. This is average for many years. And VCS, the Vera, has 68.5%. And the smallest is ACR. These are the yearly. They show you the 4 registry. What is the market share? And you can see clearly that VCS is always the leading registries. Here is the project program cycle. See, there must be someone who prepares the program, what I'm going to do, how I'm going to reduce emissions, and submit for feasibility studies. Auditors will validate all these documents, and then you need to register it. Once approved, register it with the carbon standards registries, and then you implement the project. Of course, every project needs money. You will need some funding for the project to be successful. After that, when you commission it, year on year, they can issue you the certificates and you can sell them. Okay, the buyer side, what you have to worry is the emission reduction price agreement. So such trades has got an agreement that governs the transaction. Just like you trade OTC derivatives, you use ISDA documents, but in this transaction, they use ERPA. Negotiate on the terms, and then you trade. Of course, they issue you the carbon credits. You can use it to offset your emissions. You tender to your national authority for that. Yeah, but I also say that voluntary carbon market is not only for people who want to offset, because many industries do not have mandatory requirement to offset their emissions, right? Not every industry has the, but you can also support it by buying the credit and retire without offset, because you are funding this carbon market for more projects to be successful, so more reduction. So some big corporates, they still buy. Like Microsoft, maybe they have a lot of servers. They need to offset. I don't know whether they are mandated to offset their emissions, but there are companies, they are good corporate citizens. They just buy the credit and retire them. So in a way, the voluntary market also allow you to participate by buying such certificates and retire them without offsets. And that is what we call the voluntary program. You look at the 170 types of carbon credits. Oh, there's so many of them. Forestry, renewable energy, household, community, blah, blah, a lot of things. You can see that it's not just one type. There are many, many types. Yeah, to understand all the various projects, you have to read the 4 registries handbook, what they really are, what can qualify. Okay. So you look at here. So far, the projects, most projects still come from the forestry stuff, because probably by far the easiest to implement. You may already have a forest as long as you promise and you enforce that you don't reduce the size of the forest, you can claim some credit. Yeah. So you look at it, the rest of them are much smaller. Wind, solar, and hydro. And hydropower, they even differentiate you from dam storage type of hydropower, cannot qualify. You must be flow type, they call it run on river. They call it run on river project. So in fact, only smaller hydropower project can qualify to claim credit. The big dam, because they think that you actually harm the environment more than you save the emission. So they don't qualify. You cannot qualify for that. So before you start any project, you must really study the standards and know what it requires. Okay. 56% of the projects are developed in Asia. Only 7% in Europe and North America. So in fact, Asian countries contributing most of the carbon credit projects. And look at this. In fact, I got these slides from our research. They didn't know that I'm coming to Indonesia, but they are using Indonesia as the example for the carbon project. They say that they preserved 6,400 hectares of tropical forest because they didn't allow them to convert into 4 palm oil estates. By doing that, that is a carbon project where you can You register with Vera and you can get credits, issue you the credit certificates. They estimate that you can absorb like 3.5 million ton of CO2 emissions. Good example in Kalimantan. They even show you how to look for this, the documentation and the certificates issued over the years. Yeah, Vera, you go to Vera registry, you will find this project, which is located in Kalimantan, Indonesia. So raising standard in the voluntary carbon markets. Having said so much, we say, yeah, we do all this project, but there are still abuses, I'm sure. Yeah. That is why they are still improving the standards, improving the policy, improving the accounting and audit and everything. Because I'm sure some people may have abused it in the early years when everyone is developing a new product or rather new standard. Obviously, there will be some loopholes. People have been exploiting it to make good money. In fact, not a lot of money. In fact, a lot of credit has not been sold, are still in stock. Yeah. So they say that there are repeated scandals, mis-sold, double counted, and things like that. So they are still improving it. A lot of work still need to be done. And there is this Council for Voluntary Carbon Markets. They're creating the new policies, new core principles, so to speak. So here they show you the growth. Voluntary market increased by 156% from Q1 to Q3 versus same period in 2020. Yeah. And the agriculture, forestation, and other land use, VCUs, those that concerning land, increased by 67% with this CCB label. CCB label is an additional requirement administered by Vera. They call it community biodiversity, climate, community, and biodiversity label. So they are not only reducing the emission, they want it to benefit also the community, and there must be biodiversity before they can issue you such AFLOU certificate with CCB label. Here you look at the total issuance of top 4 registries. In 2021, 368 million credit issue, but only 161 million retired in 2021. So you see that you produce more than you retire each year. So there are a lot of old stocks. After I will share with you what are the old stocks. Right? So the accumulated surplus has been increasing. So it doesn't mean you keep putting money into creating new carbon projects, you're going to make a lot of money. It may not be so. You may wait for time to come when more companies want to be compliant or voluntarily want to be compliant voluntarily. Then can you absorb all these excess certificates? And that was the registry. Now we look at the exchanges. The registry is like the manufacturer, right? The real projects need them to issue these certificates. The certificate is for you to buy for your offset or to retire it. You need exchanges to help you to help the buyer and seller to come together. So there are 4, the top 4: carbon trade exchange, token, CBL, air carbon, the 4 of them. Okay, by far the biggest is CBL, all right? So this exchange allow all the different industry standards, including the UN's Clean Development Mechanism, CDM. CDM is also one of the issuing registry, other than the big 4 just now I show you. And token is a bit special. They convert the VCUs into crypto, because crypto is a hip thing, right? Everybody likes it. So in order to attract all the young participants, probably, they convert it into crypto, so you can trade them as a crypto, something like cryptocurrencies. And CBL, in fact, you can trade all registries in the world in CBL. And ACX is another one using distributed ledger technology. Yeah. Even though it did not say it's a crypto type of token, it is still using the same backbone in trading the carbon credits. And CBL, the biggest, you can see that 121 million tons traded in 2021, up by 288%. So you can see the growth in the voluntary carbon markets is phenomenal. CME exchange overall doesn't grow like this kind of volume every year. If we can grow 10-20%, we are great. But you look at the carbon credit, and this is the initial stage. That is why you need to pay some attention to this market. It is growing so fast. There must be something, and more companies in the world have to be compliant. More and more countries have signed up with the Paris Agreement and implementing it. So this is a growing market that we have to watch the space. We are all in the investment industry. And of course, the volume, they show you, it's been trading up just like the other chart. Trading in individual project credit accounted for 80%. Individual, so a lot of individual projects trade their certificates in CBL. So CBL is a sports exchange, which means today, when you want to buy, you must have money in your account. You want to sell, you must have the certificate deposited in your account. They know that you have the stock before they allow you to sell, right? So all these certificates, you have to trade through these 4 exchanges. Or there are more exchanges, but these 4 are by far the biggest. You look at here, the total is about, when we have this slide, it was last year, so they say 1 billion plus. 40% more, 65% more offsets retired. More active buyers are in energy, consumer goods, finance, and insurance sectors. So they are telling you these are the participants in the market. But when we have these slides, we really have the latest figures, almost like very close to 2 billion. Yeah, 2021, almost near, a bit below 2 billion. So you can see the market is really huge. And 148% increase year on year. You look at the price, yeah, you'll be interested in how much is 1 ton of carbon dioxide emission. It's only a few dollars. So you can be a good citizen by buying 1 lot, 1,000 contract. That's 5,000 US, and you can help the world reduce 1,000 ton of CO2. Yeah, but the whole thing is that you compare the price. From 2020 to 2021, the price has increased, even though it may not be a lot, but it has increased. So I don't know whether you believe in the market is going up all the way, or you may still come back down sometime and then up. So it's your view. Here I show you, it's all still below. Most of them are below $10. All right, different kind of carbon credits. So this is the whole ecosystem. You need the project developers. You need people to develop the projects to produce the emission reduction. Then you need a registry to register you and issue you the certificates. And then you need to have exchange to trade. And then where CME comes in, we help you to manage your risk. If you think it's going up, you can always come to the futures market to buy futures. Or you think the price should go down, you can always sell futures. If you are the producer, you may want to sell futures in our market, right? I'll be producing a lot of certificates year on year. I may want to do some hedging. I sell ahead of time. But if you are the corporate that needs to buy emission to reduce for compliance purposes or for voluntary, because some company may not be mandatory at this point in time, but it may be mandatory years later. Like you see the aviation industry, after 2027, you'll be mandatory. So you can start buying the futures now, if you think the price is going to go up. So this is where CME play a role in the voluntary carbon markets. We help you to manage your risk. Yeah. And if you look at our contract specs, you will know that we are We are actually in cooperation with CBL and Vera in a lot of projects, the two biggest ones. Here you look at the carbon market. It's not one market. Please not be mistaken. It's always fragmented. And in Europe, even though the volume is bigger, it is mainly the mandatory markets, cap and trade market. Those people that save on the credit, they can sell it. The voluntary are the dark color one. You can see that it's still very small, but very small means opportunities. Yeah, it should grow over time. So this is the CBL news. We just want to show you that all our futures contract was settled into the CBL spot contracts, which I will show you in the specs later. So CBL's development is something that you should watch, because Blackstone has invested in Blackstone, the biggest hedge fund, right? And they also acquired some other platforms to help them in expanding their trading infrastructure. And here, these are some decisions and actions from the countries. Yeah, everyone is implementing the Paris Agreement. After you sign, you must do something. And there are changes, we also have to implement the changes. So these are the various countries. Yeah. Of course, Singapore signed bilateral agreement. This is because of Article 6, allow cross-border trading of carbon credits. So you have to sign with different countries that you can sell them your offset or you can buy from them. And we keep mentioning Article 6 because it was only fixed last year. And there are still details to be developed under this Article 6, the trading of credits cross-border. And there are a number of developing countries are now developing their own local carbon credit policies. Indonesia is one of them. It's now probably in the consultation period and will be coming out with the latest policies. So they have suspended project approvals. So no new projects for this period of time. Yeah, those that we show you were the previous one, the old projects. And some people still think that reduction avoidance is not real reduction. They think it must be removal or sequestration. Sequestration means there are now projects that can take all the carbon dioxide and pump them deep down below the earth to keep them there. Right? So only this type of sequestrations or removal, totally remove it, then they think it's a real reduction. I don't know. We have to watch this space, see how it develops. It may be in the new standards that they give more credits to such project and less credit to the others. We don't know. But we have to keep watch on this. And core carbon principle only not really finalized, but they have started consultations in September. This is only October. A few days after that, we have to see what will come out in the core principles. And we have to, ICAO will validate the baseline. Yesterday, there was the period that they will be validating that. And November, we have to watch the two articles 6.2 and 6.4. They are going to come up with details on that. So that was the voluntary carbon market. And what CME has contributed over these years. We say that CME established the infrastructure and oversight. Yeah, we want to be, sorry, maybe we are greenwashing, but we want to be compliant with the ESG. So we really committed to develop a suite of products, all right? And we have, in fact, a wide range of products. You cannot find another exchange that has more products than CME, I would say. There are just too many. So many that we don't even know. The CME people may not even know every product. And it works with various organizations in the world. Yeah, the Sustainable Stock Exchange. And The CFTC, US regulator, ISDA, I mentioned ISDA in the OTC derivative space because very soon, all these carbon credit, other than the listed futures, there will be OTC forwards or swaps will be traded. So ISDA also will be developing the master agreement for such transactions. So we are working with them, the FIA, the Futures Exchange Associations and things like that. We're working all this so we keep abreast of all the development in this space, and we can design and list new products according to the market's needs. If you look at this timeline, you can't see the years, or the number missing. In fact, we show you from even in the 90s up to today, we have been launching all the different products. Yeah, we have snowfall futures, we have the temperature futures, talk about cooling day and heating days. Yeah, probably you have, I do not know whether you have heard of such futures contract where you buy futures, and if the heating day means if the temperature go up by 1 degree C, my contract will worth how much more, so I can sell it with a profit. If I do a cooling day, if the temperature down by 1 degree C, I will benefit from so much. But you may ask me, who wants to trade temperature? Why do you want to trade the temperature of a city? Do you know why? Is there a need to trade temperatures? For nothing, just to gamble. Jackpot. Tomorrow the temperature is going up by 1 degree C. There is use for such contracts. What's the use? If you run an amusement park like Disneyland, if the temperature drop by 1%, the number of people coming to Disneyland is going to drop by, I don't know, 50,000, 10,000. So you're going to lose in income. I better hedge myself using the temperature day. Then who's going to buy? If you want to buy, who's going to sell you? There must be people who benefit from temperature drops, right? Probably the electricity company or the steam generation company, because the temperature drops, I will have more people turn on their heaters. So I am the supplier. I can let you hedge it, because it may not happen. It may be in my favor still. And if I have more revenue, I don't mind share some with you because I already get enough. So that forms a market. Even temperature is a risk to some businesses, which we cannot think of. So there are many things like snowfall futures. I haven't thought of what can be done using snowfall futures. I don't know. But all these are environment related. Definitely there are some use, or else who was going to trade it? Of course, these contracts are not trading like S&P futures every day. You see thousands and thousands and millions going through. These are contracts that are more specialized, where you need to find counterparties, and they usually go through our block trades mechanism, something like a semi-OTC kind of trades, but is cleared in the futures exchange. So there are such things, such contracts, until the latest, of course, now all the biofuels, water contract. We also launched water contracts. Why water contracts? Because they think that water is a precious resource. If the environment keep worsening, one day you'll be short of waters. So you better hedge yourself with water futures contract. So things like that. We are developing, still developing. Of course, the latest is our carbon futures, which I will talk about them later. So agreed 10 core principles, including launch product that the payoff is uncertain. In fact, many of these so-called environment contract, temperature contract, don't really make a lot of money. They don't have such big volume, as I say, like S&P or the interest rates, but they serve the market. So we still offer this kind of clearing. Sustainability should be embedded in the product launch process. So those are about how to be, ESG compliant. And we don't set the ESG standards. We will follow standard sets by those international or supranational organizations. So water futures, we launched it in early last year, or December 2020. Yeah. This is the ESG in agriculture. So our agriculture product also will observe such requirements. Bioenergy, we have this ethanol Platts contract, which means the index is maintained by Platts, a company that maintains all the commodities index. We also host Chicago, Rotterdam ethanol and used cooking oil, because these are all alternatives to fossil fuel. And in fact, now the sexy contract is the soybean oil. Even soybean oil can be used as a biofuel. And many people now trade soybean oil more like energy contract than an agricultural contract. So there are many changes in the market that certain contract used to be a agricultural contract, now it becomes ESG, more ESG-like contract. Just like copper. Copper used to be just a general industrial matters. Now people are going after it because if we are going into electric cars, more copper will be used. It will become an important metals. So you will see later that I have some charts, some diagrams on the various components used in an electric car. They are now sort of like ESG contract. They influence the price of all the new products. And metals, we have scrap metals. So you will ask, what is scrap? Because scrap we recycle is also environmental friendly. So scrap metals has also become an important contract in the ESG segment. And responsible sourcing. This is one guidelines that the exchange has adopted, because they want to make sure that the metals or the mine that you produce, the metals or whatever, minerals for delivery in the exchange must be from responsible sourcing. It cannot be financing terrorism. It cannot be hurting the environment more than saving the environment. So there are guidelines on that, or else we will not accept it. And this is also a guideline for LBMA, the London Metals, Bullion and Metals Associations, the market that you deliver all your London spot gold. So we also have several battery products, because more electric cars, more electric stuff, more battery, including our phones, more batteries. So all the battery metals, we also need to adopt the responsible sourcing guidelines. So they are saying that you can buy a virtual car. We don't have a car future so far. We don't. CME has not launched a electric car futures, but you can combine a few contracts to synthesize your own car futures. So you just buy cobalt, palladium, platinum, which is part of used in the batteries, bodywork, aluminum and steel contracts, electrical, copper, and charging, whatever. You know, you can actually combine a few contracts to make it an electric car. Because if the price of all these components are up, electric car obviously has to go up. Yeah. In fact, I do not know whether you have heard of even our oil contracts. We have such thing called synthetic refinery contract. Yeah. So you hedge your input, crude oil, you hedge your output, you sell the diesel and the petrol. So in such a way, because we know the ratio, one barrel of crude oil can produce how much diesel and petrol. If you do that in the spread, we call it spread trading, you can actually have a synthetic refinery, right? When the spread is too big, we try to take profit. When the spread is too small, we try to do the reverse to see the spread coming up. The same thing. We have synthetic refinery, we can also have synthetic EV or virtual EV. So I'll mention about heating days, cooling days, and blah, blah, all the temperature contract. You can see that they are also been increasing in the volume traded in the exchange. That means more people are looking into this space. They're learning to use all these contracts to manage the risk in the ESG space. And there are records activities level for our S&P 500 futures. You know that we also have another index that is ESG S&P 500. Of course, the bigger one is still the generic, the old S&P 500. But we also have the ESG compliant S&P 500. that also has increased in volume. So these last two slides is trying to boast that we are into sustainable hedging and sustainable clearing. So we are watching this space. There's no fixed rule. What is sustainable hedging? Yes, when companies use our exchange to hedge their contract, it must be sustainable. It cannot be doing for just this period of time. And the same thing, we are doing the clearing business. We also need to have sustainable clearing. So we don't have yet any fixed guidelines. We are still developing, but we are definitely into it. So here, the global emission offset futures, that's why we call it GEO futures. Yeah. When we say carbon credit certificates, because they have so many names, they have VER, they have VCU, they have whatever. So in the futures contract, we call it global emission offset future. You can deliver any of that as long as it fulfills the requirement. Okay, these are the three that we have just launched last year and this year. The latest contract, in fact, beginning of this year, we just launched it. So you guys are the first that I talked to on emission futures. We also have the waters, the metals, bioenergy. You can see that we have launched so many different ESG related contracts. What is a GEO futures? This is the first one that we launched last year. It is based on tech-based project. Tech-based project. That means agricultural projects certificate cannot be delivered into this contract, only tech-based. It can be from any of the registries as long as you fulfill the requirement. And it also follow this CORSIA, the International Civil Aviation Organization's standard. So to the airlines, using this futures contract is the best because all the contracts that tendered or delivered must follow this standard, the CORSIA standard. And then the second contract that we launched was so-called Nature GEO, nature-based carbon offsets. This one, obviously, since it's nature, means all the land use forestation certificates can be delivered into this contract. Yeah, so probably there'll be more because we can see that most of the projects are from forestations and land use. This is another one. And then this year, we have launched a new contract called CORE. Why do we have it CORE? Because you have to follow CCP. CCP is not Chinese Communist Party, it's Core Carbon Principle. Yeah, the Chinese cannot be too happy about that. We use CCP as the abbreviations. So the Core Carbon Principle is still in development. You can see that in my previous slide, I show you that they are still developing. It's still yet to come up with a finalized one. But at least there are some guidelines over there. So we launched the contract based on the current principles. Yeah. So when there's new guidelines out, we will follow the new guidelines. So we'll keep following the new standard. Because this is by far probably the most stringent one, eventually going to replace all the old principles that the UN has promulgated. That is why we launched this contract, even though the volume is not going to be comparable with the other two contracts, but because they will be the standard in future. So we have launched it. As we mentioned in the previous slides, even if there's no profit, we still want to serve the market with all these ESG contracts. So these are the contract specs. So usually you don't read this. Most people trade futures. Only when you trade the futures, you go look at it. So what is it all about? It tells you one contract is 1,000 tons of offsets. So if you buy one contract, $5 unit price, $5 from times 1,000. So the contract value is 5,000. All right. And you can see that GEO, we say that is tech-based. So all three registry can deliver. Certificates issued by all three can be delivered. But these two, only Vera can deliver it. So if you trade, obviously you have to watch out for all these things. Is this something that you want or you have the certificates to deliver? So here is just a 3 circles to show you the characteristics of the various of the 3 contracts. What are common, what are unique to the contract. All right. So all was settled through CBL, the spot exchange, contract. CBL will do the final delivery. And you can see that the price has been up. The trend has been up. But of course, the Russian has helped to bring the price down, right? Yeah, so all markets down when there is war. So if you want price to be cheaper, have more wars. No, that's not what we want, right? Yeah. So these are the volumes and daily average and open interest. That means open interest means contract that is still outstanding, has not been closed. That means people are holding it for longer term, and not just doing day trading. These are the volume, and you can see that it's been growing. Okay. And deliveries, 90% of deliveries took place in December. Don't ask me, I don't know why all took place in December. Probably that's the deadline for all the organization to show their government or their authorities that they have the offsets done. And 12 different FCM. FCM means brokers have facilitated the deliveries. NGO 3.49 million tons, GEO 2.43. See, so these are the 2 that have the volume. Of course, the CGEO just launched this year. We don't have the statistics yet. It grows rapidly. 500 million credits were traded in 2021. This is our market. I'm not talking about the global market, our CME futures market. All right. And the global weighted average reached $4, compared with 2.52 in 2020. So almost double. So instead of speculating crypto, you may want to speculate on this carbon futures. And here you see that some company has already started the concept of applying all these offsets. When they buy some polluting commodities, at the same time they buy the credit from the seller. Yeah. So here it says that all this that they bought cover scope 1, 2, and 3. What does it mean, 1, 2, and 3? 1 is like when you drive a car, your company has got a lot of trucks, the truck burn fuels. That's scope 1 emission. Scope 2 is that if you buy electric car, you say, hey, I don't burn fossil fuel. I use electricity. But because when they generate electricity, they burn fossil fuels. So that's scope 2. You still emit something. Scope 3 is that not your assets, you cannot control. For example, your company have 10,000 employees. Every day they drive to work, they take a bus to work. They also generate emission because of you. So that's scope 3. So they say that this credit that they bought cover all 3. It can be used to offset all 3. All right, that's what it meant. And launch date, we see that one of them was March 1st last year. In fact, was 28 February. And then NGO is August 2nd. And the latest one is this year. They didn't show it. Okay. So these are the price of all 3. You can see that, yeah, thanks to the war, the price has come down a bit. And this is what the volume that we have since launch and for 2022 itself. 2022, the volume we are only in October 2022, and this statistic probably up to August, we already surpassed the 2021 volume for the GEO. You can see that. Same thing happens with NGO. This CGO is only a new contract, so the volume is still sizable. You can see that all 3 are being used by the market for carbon offsets. Oh yeah, it's here. August 8th, brand new product. Just 2 months ago, we launched this contract. So sorry, March 7th. This August 8th, they call NGO trailing. Oh goodness, I was trying to find out what trailing means. Even I have to find out. I was asking this question, why do we want to launch such product called trailing? It means, because all this contract has got vintage period. You can, like our NGO, our GO, it says that you can only deliver anything that no more than 5 years from today or from the contract. So 5 years, so which means you can only deliver 21/7. Some even 6 years, 21/6. But as I shown you, there are a lot of old credit certificates that are still there. So they allow you to trade. Yes, O1, you trade under, you can deliver into all these trailing contracts. So obviously the O1 are cheaper. Yeah. So it depends on your country. If they allow you to use O1 to offset, then you go buy O1s. It's cheaper. It's at least 24% cheaper discount for trailing contracts. So the conclusion, the market is operating at a higher standards of compliance and oversight. That's what we hope to achieve. We always say we do, but there will always be room for improvement to achieve higher standards. Okay, more spot trades, definitely, because of futures. Even though future is a derivatives, but this day, if you look at the commodities market, in fact, the futures is setting the price for the spot. So usually when there's more futures trades, it will also bring up the spot trades. So there will be price relationship between the two contracts. And there will be OTC platforms, as I said. That's why ISDA is involved in the development. Definitely people will start developing all the OTC contracts for carbon credits and creation of indexes. Because right now we are trading physically delivered contracts. And people may not want, they just want to hedge it and have a cash settled contract. So all these index will come into play later on. All right. That's the end of my whole sharing. You have any questions for me?
Hello. Okay, thank you very much, Mr. Bay, for the fruitful session. So I think we're going to open the floor for a few Q&A if there are any questions from you guys. There's one over there.
Thank you, Mr. Way, for your presentation. Just have a bit question on about this market. So, in your understanding for this NGO futures, who is actually the main buyers of today? Because I think in your presentation it was mentioned, I think close to like $2 billion of transactions last year. So, who are actually the main buyers of this NGO futures at the moment? And are these guys actually, do a transaction based on compliance basis, or most of them are actually doing a voluntary purchase in the market? Thank you.
If you talk about the GEO prop, it must be the aviation industry, right? Because even though it's not mandatory until 2027, it's voluntary now. So those bigger airlines would always want to be ESG compliant. That is a better selling point to tell your customers that, hey, I'm ESG compliant. I don't increase the Earth's temperature by ferrying you all over the world, right? And for NGO, probably the aviation industry will not use it. But as I said before, there are companies which want to be ESG compliant, even before there's mandate, before you're asked by the government, right? And a lot of companies now, if you say that I'm ESG compliant, do you show that you have done any of these offsets? In fact, Singapore government has also announced that certain industry, they're going to impose carbon tax. You can impose carbon tax. So based on your emission pattern or whatever, they will have some standards to measure you. Every year you have to pay, let's say you emit like 5 million ton, you have to pay so much. But Singapore government also allow them to use such carbon credit to offset. So instead of paying cash to the government, you can always go buy such certificates. So if this is not mandatory until I think 2023, if I remember it correctly. So some company may start buying this. So you have to do it. And you can tell people you are compliant even before it's mandatory. That will be good for them. So more and more companies will be doing, because many corporates has committed, I want to be net zero, but you want to net zero by 2050, you sit still doing nothing until 2050. No, you have to do something. So these people are the buyers. And there will be more, which is what we believe in.
Could you share which industries of the world that, at the moment is actually already in the compliance mode to purchase from the carbon market?
I can't hear you quite clearly.
So can you share with us perhaps which industries of the world that actually already, being imposed to buy carbon credit from the market beyond aviation?
It's very clear that the energy sectors, they are the biggest emission, they are biggest culprits, so to speak. So in fact, you can see the EU, they have the biggest mandatory market or compliance market. They are mandated by the government in EU to reduce emission. In fact, you look at the whole world, in fact, the EU is the most compliant. Probably for us in Asia, still a bit like, how can I have more projects to sell my certificate rather than buying? You see, that is probably our thinking. But the EU, the North America, they have such mandates. North America, especially in California, they have also cap and trade mechanism. They must comply. So these are the biggest places where such trades is going on. Here is still nothing, I would say. Yeah, but it is something that we have to watch. It will come.
Okay, thank you.
Is there any questions? There are questions. It seems there's a few questions, Mr. Bay, from those joining in the Zoom space. So can we see? Okay. So let me so good evening. This is Vincent Suyana from KPMG Indonesia and would like to ask a few questions. So number one, is Indonesia originated carbon credits, let's say for NBS, are allowed to be traded outside Indonesia? And can the Indonesian certified emission reduction also be traded in global exchange market?
I think this is something yet to be done because Article 6 will only be finalized slightly later. It definitely could allow cross-border trading, that's for sure. But as to any trading, you must have bilateral agreement. And this is the difficult part. Country and country have to sign. You see that Singapore has signed with 2 countries on such bilateral agreement to trade the carbon credits. Obviously, Singapore is a net buyer. How can we be a seller? We don't even have anything to really reduce emission, right? So you need to sign bilateral agreement with those countries. So for Indonesia to do that, I think Indonesian government has to initiate such talk, negotiations with the different countries. Yeah. I do not know if there is so-called, they will come up with a protocol where everyone signed to it, then you are considered done. But that is also very difficult. You know that any accord to be signed by so many countries, after signing, you still need to be ratified by your parliament. This is a lengthy process. It's not something as simple, even though it looks like the moment I sign, I can trade, I can sell my credit. There's still work to be done, but it is not impossible. The day will come.
So there's the second question. Why do you think the Indonesian government suspended the VCM validation, and when do you think the project will be continued?
When they will continue, I won't know. But why it's suspended is that they are developing the new standards. They already have some projects, right? Like I show you the other project already registered with Vera, has been issuing certificates on those preservations. But I'm sure there will be still some shortcomings in the policies. So probably the Indonesian government is trying to tighten everything to align with the global standards. So in the interim, you know that when a government is tightening policy, what will the businessmen do? Try to rush to register before the policy change. That is why they have to suspend it. They say, stop, let's fine-tune our policy before we accept new evaluation. That's what I think. But when are they coming back? I don't know. You guys should know better than me. Yeah. Yes.
Just wondering, what happened if someone producing the carbon, they sell it to the market, and somehow later on, the government say it's illegal. I'm yet to allow you selling. Then I think that happened just recently? And secondly, whether this kind of carbon producing is based on the inventory. What I mean is that if I produce, say, 10 million tons CO2 equivalent, and I only sell 2 million, can I sell the remaining 8 million the next year? Thank you.
You can, because the vintage is 5 years.
Okay.
So this year you cannot sell itself. But once past that period, the 3 standard contract, you cannot deliver into it. But we have the trailing futures. That means the older stocks, you can trade that. You can deliver into those contracts. But whether there will be enough volume to buy up all the old stocks, I don't know. Okay. Rightfully, when you are registered, approved by the registry and certificate issued to you, that is valid. It cannot be. But whether you can sell overseas, whether you infringe local law, I don't know. That is I don't know how to interpret your local law, whether when you don't have a bilateral agreement, you tender that. I'm sure that one you have to check with your local legal firms on whether that will be something against the law. Yeah, but technically, once you're issued with that, that is a valid credit. Yeah, except that some registry are not going to allow, they only allow those corresponding adjustment certificates. Only one registry, if you look at the 4, one of them in my slides. I did mention it when I go past it. Now that you ask, most of the registry accept that if you generate a certificate, that country has already counted it as reduction for the country. And if you sell it, in fact, you have to reduce it. When you sell it, you sell to another country, you should reduce it. Yeah, so only one registry insists that if you want to deliver through me, your country must have corresponding adjustment policy. If you sell to others, you're going to count towards, because otherwise you double count, right? You help the other country to offset and you also count to your offset. So I can't, if you look at my slides, you can have it. You will see that there's one registry that insists on that.
So there's another question from those joining in Zoom. So this is from Chi Xiang Wong. Does the investors be rewarded from monetary point of view by investing in ESG compliant companies? If yes, then how?
These $1 million questions. The CFA did not teach me how to evaluate ESG compliant. I really don't know. If you ask me whether you can make some money from trading our futures or trading the sports certificates, that may be if you are right in your view. But investing in a company that is ESG compliant, I can only say that probably every consumer will grow with the habit of, I want to only trade or consume products from an ESG compliant company. So technically, those companies should enjoy better sales volume and make more money. In the end, as an investor, you benefit from it. That's the only thing I can think of. Other than that, I don't know. Yeah. Anyone else?
Oh, there's another question coming from.
Okay, well, there are more.
So this is from Ibu Siti Rahmawati. So how do you see a proper, just and affordable sustainable finance transition advocated from developing countries? Thank you.
Just and affordable sustainable finance transition. I really do not, I don't quite understand what you are asking. You mean that we want to be ESG compliant, it may be costly. So, or what?
I think
don't
Bu
quite
Siti
understand.
here is coming from an angle that, because probably right now, like as you say, those that are ESG compliant are more coming from the European market, right? I think those coming from the developing countries are weighing more on the cost and benefit side.
Right.
So I think Ibu Siti here is trying to ask, how would you enter to the market, given that they're really all this cost and benefit mindset. So it's perhaps it should be more quote unquote affordable and
More affordable.
Yeah, and probably for seeing from an investment perspective, also sustainable finance or investment portfolio for for people in this developing countries that perhaps didn't have that set mindset on I want to invest in an ESG compliant company?
Wow. I really do not have the answer. I can just think of that. If you are in the developing countries, we have enjoyed more, so-called less regulation in the sense. You see, if you want to have an industry in the EU, probably you have to comply 101 things, regulations. So the cost in productions or any activities in those countries are much higher, and we are lower here. So probably we are so used to such kind of environment, we think that this is the way to do business. But it is not true. If we keep doing it, it's not sustainable. So we have to comply with all these more stringent methods over time. Or if the more developed countries stop using our services and product, you may have one day all the consumers are so well educated that they are made to believe that I only want to deal with ESG compliant companies. So no matter what, it may be painful at the beginning for companies in developing nations to comply, but you have to in times to come. That's what I think. So I can't think of a more affordable way to do it. You just have to comply and align with the world if this is the development. Yes. I have other questions. Yes. First one is that in terms of this, say, compliance or even
voluntary users. If I need to offset my carbon, say, is there any regulation saying, hey, I have to buy from a certain years or from current years? That question number one. And secondly, that's relating to the inventory that I earlier asked you, that say whether that it means if I cannot sell the whole production that I have this year and then I sell next year, whether there is a price difference between the carbon being produced from the older years and the current years. Thank you.
Okay. Within the window, the vintage window of 5 years or 6 years for different contracts, the price differential will not be much, because the same contract you can deliver, you can use 1 year to 5 years old, right?
Yeah.
So futures contract always deliver the cheapest. So the price will always follow the cheapest to deliver. If you look at our bond contract, it's like that. So it's like a basket where you can deliver. So no matter how, that is the price. I don't think the differential will be big. And everyone will try to deliver you the oldest one, right?
Yeah.
Within the window first.
But theoretically, if I'm a trader, and I want to keep the inventory, I would like to buy the newer one, so I can sell the next year or 2 years later. Otherwise, if that will be expired, it's worthless, right?
So if you are speculator, probably you hope for that, right? But if you are user, there's no difference to you.
Yeah, I'm talking in the front of you of traders.
I was looking for answers like what you asked.
Yeah.
I could not find. I'm telling you frankly.
Okay.
I was trying to find whether there's regulations in any of the country that says you must deliver me how many years old. Beyond that, I do not want it. I cannot find. There is no, I cannot find.
I think that's very relevant questions. I mean, if whether I can retire my compliance from the years carbon produced 2020.
They only say that you usually want to buy the certificates in roughly the same window as your emissions.
Yeah.
So in these 3 years, I try to buy things within these 3 years.
Yeah.
They say that's the most efficient way of doing. But they did not say that you cannot use older one. I cannot find any document that says that. I'm still searching.
Okay.
If I have answer, I can always share with you guys.
Okay.
I was looking for it. No, I have no answers for that. So in fact, I have the same question. Why don't I go to the trailing futures, buy the old ones to offset? That'll be cheaper.
Yeah,
it's definitely
that's
cheaper.
what I'm going to do if
So
this
I think
is
that depends on individual country. Yeah, I'm sure I must go back and look at our Singapore government's policies.
Okay.
When those companies, they have been imposed the carbon tax. So when they want to deliver the offsets, because from the general reading, it doesn't tell you the details. You must go and look into it to see that whether they allow them to tender certificates that are older. If there is, probably they still set certain limit, I think. Yeah, I don't know. That one I have to find it out. I really don't have an answer. But of course, some will say that this is just additional taxation from the government. Yeah, it's just impose you carbon tax to collect more revenue for the country. Yeah, but of course, there are some who believe in that and say that, yes, because by forcing this company to reduce carbon or pay carbon tax, you also help. Because when you buy this credit, you are financing all those projects to continue doing the same thing to reduce emissions. Yeah.
Is there another question?
The carbon trading system was actually failed back then, and whether it's going to be different this time?
I have no idea of that. It's part of the history. I really don't. I'm sorry. Yeah. Any other questions? Yes.
Do you have to have emission first, or you just
Sorry, I didn't hear the first part.
to be able to create a project to be registered in FERA, those kind of thing? Do you need to be able to have your emission first and you do the project to reduce emission, or simply if, let's say, we go and buy some land and then create a project?
You don't have to have emission first, right? For forestation, it's just preservation or some reforestation. You have a land, but not as simple as that. I have checked. It's not like there are certain requirements. You cannot say from today onward, I just cut all my palm oil tree and then plant it, and that is not true. That does not count. That does not count. I know that does not count specifically. You cannot cut down your own plantation and then start planting trees. So there are certain requirements. You must really study it. Okay, you don't need the emission first. You can even create a solar panel that you say, in fact, especially for those rural areas, instead of building a power generation stations where you have to buy fuel to generate electricity or fire coals, you created solar power to supply the whole region or the whole small town or cities. So in that, they calculate the equivalent in burning fossil fuel is so much emission. Now use solar panel. That is your credit. It can be like that. Use technology-based methods. Or you have hydropower, as I say, run on river, not using the dam method. Dam method is not counted. So there are many tiny descriptions and requirements that you really have to study. I'm no expert in all this project. I just read enough just to share with you that it is not as simple as we see. As far as I know, reforestation, because the easiest for people to do is reforestation, and that's the most difficult. Yeah, I know that.
Just follow-up question. So if I got a project and I got it registered by FERA and those kind of things, let's say doing in Indonesia, so can I just, when I got certificate, then I can sell in US, even though the government here may not have their own rules? Is that correct?
Technically, you can, but as I say, the bilateral agreement between Indonesia and another country must be there. If not, like what your colleague here asked, can you be infringing your local law? I don't know. I cannot advise you on that. But technically, every certificate can be tendered, right? Anything that is from Vera can be tendered through CME and then CBL can be used. But whether you will infringe local law, you have to check with your local lawyers. I don't know. I really don't know about that. Yeah.
As long as, let's say, Microsoft is willing to buy the certificate,
Yes,
I'm
yes.
fine, right?
Microsoft has bought a lot. Yes, you can actually sell it. But whether it infringe local law, I don't know about that. Because just like the securities in Indonesia, you want to sell to a third party outside, you also have some governing laws, right? Your securities laws and things like that. So I'm sure there will be legislation that govern this, that you have to find it out.
So probably a follow-up question to that one as well from me, Mr. Ray. Hello? Yeah. So just now, the gentleman over there, he said that, let's say I am registered in Vera, but I want to sell it to let's say to the US, some company in the US. But then if there are no bilateral agreement, then perhaps the trade isn't going through, right? So what we're saying is that we still need to push, the local government here either to have some sort of governance or perhaps validate Vera as as a registered
Or, you can
trading.
tender locally. You may have local enterprise that want to be ESG compliant. Or maybe the Indonesian government has imposed carbon tax on certain industry. I do not know about the situation here. Yeah. If there are, you can actually also tender that. And if, of course, the government must first say that, hey, Vera is one of the registry that I recognize, the same thing. Yeah. You're right.
The government doesn't have, so what kind of law we will be infringing? We probably earn some dollar.
You earn some dollar, but then your government asks you to go for coffee to talk to you. Why are you doing something that's not allowed by the local law? That one I cannot help you. You must consult your Indonesian lawyer.
Yeah, but in general, we are doing something good there. Let's say install solar panel and maybe
Yes.
protect environment. There's no negative. We earn some dollar.
Right. That is true. That is true. But as to the trading, whether it's legal, I cannot comment on that. Yeah.
So I think
Fine.
that would be all for the Q&A session today. Thank you very much, Mr. Bay, for the
It's my pleasure.
very fruitful session. Yeah, and please give him a round of applause.
Thanks.
And I think I should also extend special thanks to the sponsorship from CME Group, and also, yeah, please, applause. And of course, without these volunteers, I think I have to also extend special thanks to the volunteers that have been working behind the scenes to make this event happen today. There's Mr. Frederick Razali, there's Loisa and Satrio Pangestu. I think they're all sitting scattered around in this room, but I think they deserve a round of applause. So I think, yeah, this means the end of the session. So thank you everyone for joining, and hope to see you all again in the next event. Thank you.
Kita tanggal 24 November mau ada event lagi. Mau nggak jadi MC lagi?
Oh ya boleh.
Women in Finance. Oke.